Says we're live, so hopefully folks are out there and can hear us.
It says we're live, and looks like we are live on my iPad as well, which is great. So we'll wait a couple seconds for folks to join us. So if you are tuning in, we're happy that you're here. And if you are tuning in, if you could just leave a comment in the comment box just to let us know you're there and that you can see us and hear us. And we're going to be introducing our special guest in just a few minutes, but we like and Facebook likes for us to give that a few moments before we do all that.
So if you guys have been on our sessions for a while, you know that sometimes things are happening around us that we are dealing with. So for me today, it is the Hurricane Laura, which has just been upgraded to a 4 already before even getting ashore, which is
it was. I heard that must have just happened because last I heard it was still a 3.
Yeah, I got a notice on my phone. So it looks like Houston and our Gulf Coast is going to be spared the worst of it, but definitely thinking about anybody that's in northern Texas, Louisiana. So thinking about all of you and hoping all of us come out of this good. And I know, Robin, you're kind of on the fringe of wildfires. There's just a lot going on right now.
Yeah.
So
yeah, we have our air quality is really bad right now. And then I know in California, there's all kinds of wildfires too. So hopefully everyone is staying safe. It's just, I swear, it's just the craziest year ever. So
it sure is. So
we do have folks joining us, so that's good. We have folks from Canada, Indiana, Springfield, Virginia, which is where I used to live. Courtney's here, so that's awesome. So we are going to talk about exit planning today. So Susan, do you want to go ahead and introduce Chris?
Absolutely. We Robin and I have both sold companies. And I think maybe both of us have learned a lot of lessons, but we definitely weren't experts. And I can tell you it was an area I felt like I didn't have enough education in at the point that I decided that I had to sell to keep my sanity. And hopefully what we're trying to do is to bring on people that can help us educate and share lessons learned and tips so that you can exit on your own terms. That's one of the things that is really important to us. And so that means you need to think about it and plan for it, even when you don't think you want to do it. So we're very excited today to have from NVA, Chris Shusha, who is the Vice President of Development. And Chris has spoken at a lot of conferences and he's very knowledgeable in the process. And so Chris, welcome.
Hey, everybody.
Yeah. And I like the adage of when people are thinking, I'm not going to sell or whatever, you're going to at some point exit your business. And to go to what Susan said about exiting on your own terms, you're going to exit at some point. It's either going to be on your terms or it's not on your terms, but it needs to be something that I think we all think about and plan for as much as possible. And even if it's not necessarily on your terms, I think getting some education on what you can do to help yourself is really what we want to help you with today. And so we're really happy to have Chris here. And we're really going to talk about a whole bunch of different topics, just talking about when is it time to exit, when should you really be growing and hoping to exit, what you really should know, and understanding how to value your business. I think that's the biggest thing. I feel like everybody values their business maybe higher than what it really might be worth. And so
it's because of all that blood, sweat, and tears that you've gone through for years. So
exactly.
Hard work.
So we're going to have Chris kind of help us to understand what goes into that kind of evaluation of your business, and also what can make your business more valuable. And Susan and I think, spend a lot of time in that arena working with our clients to say, look, this is not the sexy stuff, but if you do this, it's going to help your business become more valuable. So we'll hear about some of those things. And then just really talking about what we've learned and what NVA in particular has learned during COVID. So I think this is going to be super helpful. So before we get started, just a quick reminder, if you have people you think might be interested in hearing this topic, feel free to hit the share button and you can share this with them. Obviously, this will be on Facebook, so they can get access to it anytime by just going to the Dog Gurus Facebook page and clicking on that video area. We will also save it onto our YouTube channel, so you'll be able to find it there along with a whole bunch of other Facebook Lives that we've done. And there was something else I was going to say, and now I can't remember what it was. Oh, if you have questions throughout this whole presentation, just post them in the comments, and we are going to ask Chris all of the hard questions you guys can think of. Or easy questions. We'll ask easy questions too.
No question. There's no stupid questions when it comes to anything about exiting your business. This is too important to you and your future. So don't be embarrassed to ask anything. So
Yeah,
Chris,
exactly.
I'll throw you a question right off the bat, just so folks that maybe haven't met or seen you or even know NVA before. How many deals have you guys done related to pet resorts approximately?
Thank you.
How many years have you been doing this with pet resorts?
So I'll give you a little bit of history. Thank you, everybody, for your time here this afternoon. And again, echo what you've been saying, that, our thoughts and prayers go out to everybody who's struggling right now, whether it's through COVID and the uncertainty of school and fires and hurricanes. I am waiting for the murder hornets to come around the corner because I don't like that. So,
Exactly.
So again, just want to make sure that everyone's safe and doing the best they can out there. I'd say NVA as a company has been around for 20 plus years. We started out founded by a gentleman named Stan Creighton, who is a veterinarian on the West Coast, and he was looking for an alternative to the Consolidator. It was just one or maybe two out there at the time, and a different approach, someone to preserve their legacy and build on their brand and focus on value and growth and things like that. And there wasn't anything out there, wasn't a real option for him at the time, and he created NVA. And 24 years later, with a lot of investment, a lot of great people, we're strong and healthy and doing great, but our primary focus still remains on preserving the legacy and the brands that people have spent a lifetime building, and I'm proud of that. And I think that's something that is important when you think about this important topic that we're talking about today, and that's exit. I would say for the pet resort side, we are fairly new to the space. Unlike a lot of you who've probably spent a lot more time, decades, in fact, in this profession. We've entered probably about 6 years ago, through the acquisition of a fairly large Midwest platform called Pet Suites, and it's been a great experience. Although I'd say we learned some pretty important lessons along the way, and that one of them is that it is a different business than the hospital side. Mm-hmm. Although they're complementary, we're dealing with similar clients. It's a different type of business, and the folks out there on this presentation understand that very well. So from NVA's standpoint, comparatively, we probably haven't been around as long as many of you have. Certainly not around as long as Robin and Susan have been. But we.
But I feel like I've known you.
Yeah.
I've known you more than 6 or 7 years there.
We're learning, and we're not afraid to learn. And again, it starts for us with the people. We have talented people, and we have great operators and great support, committed to the pet resort space. It's incredibly dynamic and evolving rapidly with the whole humanization of animals. And I think it's a wonderful time right now to be a pet resort operator, albeit, with some pretty stiff challenges that we faced recently. And we'll get into some of that here in a little bit. So I'd say been in pet resorts for 6 years, I'd say. And then right now we have a total of 97 locations.
Wow.
And about half of those are ones we've acquired. So we've been very active, and we have shareholders, and they love NVA as a platform. They love the pet profession, and they want to continue building a presence in pet resorts specifically. So we're active. We're actively looking to partner and acquire pet resorts across the country. In fact, we are even building some around the Pet Suites brand in certain markets. So we're active, I would say, is the right word.
Yeah, and I would say for the oh, go ahead, Susan.
Well, I was just going to say the importance that for you that the brand and legacy of what the owner built staying in place. I can attest to that as far as you purchased one of our, or partnered with, I don't know the exact terms of the deal, one of my main competitors and friends here in the Houston market that when I had my business.
Oh.
And I can tell you the reputation of that business, and it hasn't changed a bit since he founded it, which I just wanted to say that, you know, speaking from my experience in my own market, that does help. And I know the key general managers are still there and in place. And so if that's real important to you, your people and your brand and what you've built, I've just have seen it happen.
Well,
Yeah, and it's funny that you say that, Susan, because I was actually about to say the same thing, except you said it way better than I was going to. So instead, I'm going to say that for those who pre-COVID were attending a lot of these conferences that the pet industry has, NVA has been there. So you probably have either run into Chris or possibly Jerry. And I do love what their company does, but beyond that, I love the two of them because they are just interested in helping people. So what we really appreciate about their company is they will answer all your questions. And if you don't want to work with them, they're fine with that. They're just as big on education as Susan and I are. So that's one of the reasons that we actually asked them to come onto this Facebook Live, because they have a great service that they can't offer, but beyond that, they have amazing education just to help you understand this whole process. And they're very passionate about helping people learn and really just answering questions. So we love that about them as well.
I mean, that's so great. Let me just add to that. I think that, you know, we have myself and then my two colleagues, Jerry and Angela, and you have definitely seen them and others probably that have come in at various times at the conferences from the support center. And boy, I want to underscore how important that last comment you made is relative to us being advocates. I mean, truly consultants. I mean, this is what we do. I mean, we want to acquire, we need to acquire to continue to grow, but we want to do that wisely, smartly, and evaluate each of them for their own unique characteristics and qualities and profiles. But it really kind of starts out with being an advocate for the space. These things, this decision, and I want to go back to this being a very personal question, this decision to exit or to grow, where are you in that decision process? That is a big decision. And you guys led this talk by talking about your own experience selling these before, and there's lots that you could learn. And when Jerry or Angela or myself come up to you or talk to you, you come up to us or you ask questions, it doesn't have to lead to a deal, right? It truly doesn't. NVA is going to be here a long time, and we hope you are too. And when the time is right for you to make the decision, then, you know, there's folks like NVA out there that you know you should talk to. But this is not a quick, short process. There's not just you have 30 minutes, ask me your questions, and sign here. It cannot go like that, and our team does not believe in that. And again, it's sort of a personal belief, but it is, I think, you know, a belief of my team, our team, and NVA that this is a big decision and it should not be taken lightly. And there's lots and lots of questions. And the more information we can provide in a safe environment where nobody feels pressured, that's the best, right? It really is the best because it is a very personal question and everybody's time frame is different for that. So we're here to provide guidance, and there's lots of avenues for that, resources to figure that out. And we'd love to be part of your process and your thinking, even if you decide that now's not the time, and even if you decide that NVA is not the right partner. Those are all okay, right? So it's all.
So I'm going to jump back to what you just said and kind of what goes into deciding when is it time to exit, or when should you say, I'm not going to exit, I'm going to grow and maybe exit later? Like, what are some of the things that you talk to folks about to make those decisions? And I think in particular with COVID, I know Susan and I have heard from people who weren't planning on exit, but now they're like, oh, I can't take this anymore, I'm going to exit now anyway. Just what are some of the things that you guys think are important in kind of making those decisions?
Well, it's to us, I mean, when you peel it back, right? If you think of when somebody says, I've had it, this is too much. I mean, I've lived through a lot, and not all of it's been easy, and certainly not all of it's, I've had wind in my sail and sometimes not in my sail, but I've been able to continue to go. And sometimes it just becomes, I've reached the point where I don't want to work that hard. I mean, truly, can be a 365-day a year job. I mean, worse than retail, right? So it's a super demanding job. And I think for us, it's more just coming on people coming across people that say, it's been a great run. We've been thinking about this for some time now, and we want to begin enjoying this next chapter of our life. We think we've created value here as a shareholder. We've hopefully enjoyed some cash on cash returns as being the owners of a business that's profitable, but there is this value that we'll talk about here in the exit value. Like, what is that worth? And maybe there wasn't a market for selling your pet resort to a consolidator like us not long ago, but there is today, and there's real value in that exit value. So it's people saying, maybe now's not the time, or maybe now's the time for me to exit because I want to pursue other hobbies and interests and travel, or write a book, or take care of my family, et cetera. Just enjoy some time off. Other people are saying, this is not a popsicle or lemonade stand anymore. This is a real business, and it's hard, and that's okay too. I mean, people come into this profession with tremendous passion, and next thing you know, they're running 100 dogs a day, and a staff, and all kinds of regulations and requirements and things. And it's not hard to understand that people can get worn out from that, even though they might not have been doing it for very long. I mean, it's more just like we said, a very personal decision. It can be driven by emotion. Like, I've just had it. I've seen bad times. This is as bad as it's going to get. I've been in it for 30 years. Now's the time. Or people saying, if I really want to, I think I've built this thing up. I don't know if I have the energy like I did when I was 30 to expand and to go make that investment and to risk more capital. I mean, it's been a good life for me, and let's just see what the business is worth today. And maybe now's the time to exit. So it's really a variety of things that we're seeing when we're talking to potential sellers, that it's either they've been doing it for decades and now's the time, they've been thinking about it for a while, or they're saying, I need a partner. I need somebody to take it over. I'd love for you guys to continue to grow my brand. We have some relationships like that, whether it's St. Louis or Denver, where we have partnerships with sellers that want to continue to plant flags around their brand in certain markets. We love that. So it's not a complete exit in that scenario, but it is about finding a partner, a thought partner that can help them continue to grow and create value around their brand. And then other people say, I had no idea that I could build something like this by the time I'm 40, and it's incredibly difficult, and I want to do something else. I want to have another change in my life and move on. So it's really a variety of things that we're seeing, frankly, around the when people want to exit.
Yeah, I know. Go ahead, Susan.
I do like the flexibility you offer, that it doesn't have to be a total sale. And I think for some people I've talked to that was a part of your business, what they really liked was if they could stay on and ensure the quality care of the pets and the customers are taken care of. And what you guys do as a partner is some of the stuff that's not so much fun. You can kind of help them with providing more staff management resources and benefits and some of the financial. And so I think people may not realize that option's out there.
Yeah.
And I
Correct.
will say, when I sold my business, I actually sold half of it. And at the time, I didn't realize that there was an option to maybe bring someone on to grow, you know, kind of do the behind the scenes stuff. But I sold because I was starting to get so busy with consulting, and I was in the Marine
Yep.
Corps Reserve at the time. And then I had my daycare and my training, and I didn't really know of my options. So I sold part of the business and kept the training part,
Mhm.
and that. So it is, I think, really important to understand what is available to you. And I guess that kind of leads into kind of determining, because this is the other thing I didn't know, is what types of buyers you can have to actually buy a business. So can you talk a little bit about that? I think most people think of, I'm going to sell my business to, you know, one of my employees or one of my clients, or, you know, somebody that I know. And then there's other people that, you know, bring on a financial buyer. So just talk a little bit about what those options really look like for anybody that's interested in selling.
Yep, that's a great question. So I think for me, I put it in two buckets just to keep it simple. One is a strategic buyer, and then the other would be a financial buyer. A financial buyer is somebody that says, gosh, and I'm talking to a guy right now that's interested in opportunities in South Florida, and he's got a group of investors around him. And he's just picking my brain and talking a little bit. I find it pretty interesting. So I'm helping even potential competitors out there. But he is definitely a financial buyer. And what that means is that he has a background, I think, in hotels, and he has a real interest and a passion for pet resorts. And he's convinced some outside investors to invest in an idea. And the idea would be to go out and buy pet resorts, and then manage a group of them, sort of like NVA, back in the day. The difference between that type of an investor and a strategic buyer, which would be more the NVA type, is that NVA would come in and we provide all the back office type work. And a financial buyer would really want the owners and the team to be more in place, because they're buying your talent along with the business. Whereas NVA is saying, look, we see a tremendous amount of value, at the very least, as the cultural leader of this pet resort. But if you want to begin stepping down and transitioning out, we're totally fine with that, as long as we do that responsibly, right? So we just don't, so we don't crash it. We're going to step in, and we have the talent to begin supporting the business pretty much day one, because of our back office and our commitment to provide the support from a business operation standpoint. So that's mainly the difference between a strategic buyer and a financial buyer. A financial buyer really just wants to come in. They see this as a great opportunity to park cash and buy 6, 8, 10, 12, 20 locations, maybe roll them up, maybe sell them to NVA down the road, who knows, or to somebody else. But they would operationally not have the support, at least initially, to provide for that until they can build out the infrastructure. Where, again, as a strategic buyer, would have that ability to do it. Now, that's a pretty big class, right? There may be a lot of smaller, a pet resort operator across town that would think about making an acquisition as a tuck-in, or operating a pet resort as a satellite. That would be more of a strategic buyer, even though it's not on the scale of an NVA. Or there may be, a client that has a lot of money that says, man, boy, I think I'd love to operate a pet resort. And by the way, we've seen all these scenarios. And you operators out there make it look so easy that think that they could do it in their sleep. But they might have cash, and we've seen them make offers on pet resorts too. Again, I wouldn't say any one of those options are worse than the others. It's just what they offer following the acquisition. So in the case of a client who has some cash and some backing, they're going to probably want the full team to be in place. So again, they're buying the talent of the management team at the pet resort plus the business. Whereas with a strategic, you might have a little more flexibility with what it looks like down the road in terms of your involvement. But again, a great question, and an important difference between a strategic buyer and a financial buyer.
So, Chris, regardless of who's buying you, what are some of the most important things that you as a business owner would need to have prepared and ready to share with the prospective group, whether it be NVA or any buyer? I mean, I know there'd be like a non-disclosure, but what do you have to do, I guess, as a minimum with your business to be prepared to even talk about a sale?
Yeah. So first of all, will want to you will want a non-disclosure agreement with NVA. Although, we're, as I mentioned from the get-go, we're very active and we pride ourselves on our confidentiality. But it's important for both sides to feel comfortable when you're sharing such sensitive information, and that information will include, at least from our standpoint, from NVA's standpoint, it will look like. At least. Oh, you guys have me?
Yep, you're still there.
Okay. So you'll have financial statements, usually a couple of years of financial statements. So now that we're in August, we would want the January through July period of 2020, and we would want the January through July period of 2019, and we would track into a trailing 12 months. Needless to say, we would want a picture of the trailing 12-month financial performance of the pet resort, along with 2 years of financial statements. We also look at tax returns. Important to have those cleaned up. I mean, these are small family-owned businesses. Sometimes they don't jibe, and that's fine by us. We'll want to make sure that we understand if there is a variance. We'll want to understand what that is. Really, why we want to understand it would be just to make sure that we're giving you full credit for what the actual cash flow would be of the business after you sell. It's not a way for us to try to lower the purchase price. If we tried to do that, we'd never get a deal done. So the idea would be to just make sure our goal would be to make sure NVA understands what the cash flow is of the business. So then if there's any, specific contracts with employees, one thing that the lease of the building, whether you own the building or you currently lease the building. If you lease the building, what's the term? Are there renewal options? We presume if you own the building, you'll be a friendly landlord to the new tenant of NVA and the business. And then it's just policies and procedures. Like I said, compensation arrangements, key vendor agreements, just things like that we would want to make sure we would take a look at. So you would want to primarily focus on the financial statements and employee contracts, the leases, and that would probably be enough for us to get started, or anybody for that matter, with a good picture of evaluation. And again, when I say picture, I mean a picture, right? Like if you were to share your financial statements with somebody so they can go back and begin the process of an evaluation, we understand it's a process. Like we would want to make sure that we're bidding off the proper cash flow number, that we understand the variance between the tax returns and the financial statements. But we'd come back with a number that would be a starting point. So like as in anything, that we would just make sure that we're looking at this business the way you as a shareholder know the business is being run. And most often we can bridge any gap that exists, and sometimes we can't in terms of what the ultimate valuation looks like. But I would say, to get started, it is important that we get the documents proper and right. You may want to begin thinking about making sure you have all that information, and rolling. You can even look at doing evaluation on an annual basis. If you're not thinking about selling, it might be interesting to say, hey, what's my business worth today? I mean, we had a pretty good year, or it's been a flat year. What does that mean? There are companies that are willing to do that professionally, that will charge you for evaluation. NVA would do that for nothing, just to, as a good faith effort to, help educate and maybe potentially, bring you into the NVA family at some point.
Yeah, and Susan and I have always been big advocates of saying, get evaluation now, even if you're not thinking about selling, just so you have a baseline understanding. Because I do think like Susan said, we put so much blood, sweat, and tears into our business, and we think it's worth X amount. And sometimes it is, but really you don't know until you actually, and even with evaluation, you don't know until someone buys, but at least evaluation gives you a good starting point. So we would recommend that. And let me just point out that for all of you that hear Susan and I harping over and over and over about SOPs and documentation, now you know why. It helps not just with your training of your staff and being able to hold your staff accountable, but ultimately it does help in the value of your business if you have everything documented. So yeah, I just feel redeemed by that whole comment.
Plus having financials up to date.
Yeah.
Yes.
I mean, those are two great points. I mean, absolutely. And it's okay if they're not, right? I mean, we're patient. We can help figure that out. And we're, I have really a great team of people, and we can get on the phone and work through it. But I mean, it really is helpful when you begin thinking about your business and really what you're creating. Again, back to the two value propositions of being an owner is that cash on cash return, by having an ownership stake in a profitable business. But then really this part about what's this business worth after all this time, work and effort with you and your family and the sacrifices, it's kind of nice to know. I mean, these are privately held assets, right? You can't go to the stock market to see what my stock is trading at today.
Right.
However, it may yet be a very big, if not the biggest part of your portfolio in terms of your net worth, your investment, your retirement. And it would be nice to know what that's worth. So these are some key things just to stay on top of. It would be very important to do that, especially as the business grows. It can be exciting and help you kind of continue charting your course for success.
Right. So we have gotten a few questions. I'm going to start going through those. And I did get a few people asking about sending in questions confidentially. So I did put my text number, like, don't everyone start calling me now. This is actually the number I just posted. Like, in hindsight, that might not have been a good idea, but my personal cell phone number is now in the text area. So if you want to confidentially send questions that way, I will ask as many as we have time for. So I have had a few of those as well. But let me just go through a few of them. So one is, Courtney was asking, is there an upfront investment to get an idea of our company's value? And I think, like you said, there are some companies that will charge for that. So sometimes I've seen charges anywhere from $1,000 to $5,000 for that. I don't think NVA, you guys don't charge for that for people who might be a good candidate for your process. Is that correct?
That's correct. That's exactly right. Now, our valuation won't be, so I've done valuation at Deloitte & Touche and used the different approaches. We could talk about that if you want to. And there's a variety of reasons why people want valuations, not the least of which is to say, what's the value of this asset? What's the value of my non-marketable security? There may be reasons when you have a partner and you need to buy them out based on an operating agreement, right? Somebody who's wanting to retire or something else, some other reason. There's a variety of reasons why you want a valuation. So depending on what that reason is, if you're looking to just get a really decent idea for what an active acquirer of pet resorts would pay for your business, I mean, that is a market value that you're asking for. And if that's the purpose, NVA does that free of charge all the time. Again, it requires, some data collection and time and effort to pull that together for you, but we would not charge for that. I would not want to mislead anybody that if it's for estate planning purposes or tax planning purposes or to buy out an owner, a silent partner, et cetera, that's probably going to take a different form of a more professional form of valuation, that they're going to use a variety of valuation approaches and then triangulate around a range of value, and one that ultimately could hold up if contested in court. That's pretty much the technical difference between maybe our valuation and others. But just again, I think it's important to note that there may be other reasons why somebody would want a valuation.
And then another question we had was, does NVA have a gross price point for acquiring a pet boarding facility?
Well, there you go. So yes, the answer is yes, we do. But there was a time when it felt pretty firm, but now there's a little more room. I'd say, just to give you a number to answer the question, let's just say it's 800,000. and I know I got my colleagues listening, and they'll probably go all the way up to our chief executive officer, and I might have some splaining to do. But I will say 800,000 is probably a good point. And why I say that is because we've seen some really good business in that $700,000 to $800,000 with beautiful profitability and a really nice growth trajectory, right? And room to continue to grow in a nice market. So there's more to the story. And so I'd say that our team is willing to take a look at sort of in that 750-ish range. I would say it used to be closer to $1 million, but I think we were maybe being a little short-sighted on some opportunities that we could partner with and have partnered with that were growing and we just couldn't pass up. So, but right, I want to be clear, like that's for maybe an entry point for NVA. But that does not mean that there's no value in a business that's got $300,000-$400,000 and 35% profit margin and growing at 25% per year. I mean, like there's a business model, right? Like, that's a great business, and maybe there's a lot of them out there like that. So just because you might be below the threshold of NVA to take a look does not mean there's no value in that business, right? So I want to be crystal clear on that. And we've seen a lot of those too. But again, to answer the question, I'd say call it 750. That might make Jerry and Angela happy. But yeah, I would say that feels pretty good. I think we could stand behind that. And there's other things we would look at too, like size and growth and risk and location, et cetera.
Okay. And then, go ahead. What do you say?
I just want to emphasize that I think two key things that you said in your answer for people that are smaller and don't feel like their business can get to $750,000 or $800,000. It doesn't mean it can't be sold.
No.
The key points to show is a history of growth and profitability. That's what a buyer is going to be looking for. So that's where you want to put your efforts.
I'd say that's right on the money. Yep.
Yeah.
Absolutely correct. Yep. And then same thing, good policies and procedures that people are following internally. I mean, again, it goes back to saying it is not a joke to take capital, put it to risk, work 7 days a week, do that for years, and grow a business to $400,000 and provide a nice life. I mean, there's also value upon exit to you for that, with that kind of effort. I mean, it really is. So
also pay yourself. The buyer wants to see that you as the owner are paying themselves a good
right.
way.
You may not be able to do that early, but definitely create room in your cost structure for salary for you. Correct. Because then I will say that when you come to NVA and you haven't paid yourself, if that's a scenario, we would say, well, okay, let's look at the things you do. And it's these 5 things. And you may say, well, I only work 20 hours a week. Well, NVA will probably have to find somebody at some level to replace that work, that effort, that load. And there will be an actual a cost that we'll have to get to the right cash flow number because of that. So it is important to pay yourself for a lot of reasons, if not the least psychological.
Right.
Like for all that work that you're taking out some cash from the business. I mean, it's important. I mean, right? Like you might have to pay ordinary income on that versus investment taxes, but it's still important to draw some kind of compensation out of your business after all that work.
Right. So we've had a couple versions of this question, and this is a question I would love for you to answer because I'm not sure it's as simple as the question is, but what is the average multiplier? And we get asked that question a lot, like what's the multiplier you're going to pay? And then has that been impacted by COVID? And then we had another similar question, what multiplier of EBITDA are you currently paying? And if you want to explain EBITDA as well, but is it as simple as saying you're going to get this amount of multiplier? Because I think that question comes up a lot.
So when you start talking about multiples, it becomes a little risky, a little tricky. And what I mean by that is, for example, it's very frothy right now in the hospital side. And we have sellers of, beautiful but small practices in Kansas, and they have a friend that sold their practice in Georgia, and he got this multiple, and why am I not getting that multiple? So people talk, it's a small space. So that's my caveat. It always comes up. Obviously it's if coming up with the proper cash flow is the first step, which I think is the more scientific step of the valuation process. What is the free cash flow of the business, the EBITDA that you were talking about? The second, more artistic side, which is influenced by a variety of variables, not the least of which is the size, growth, profitability, and risk factor. That is one that's a little less scientific. It's just based on what we've seen in the market, what we've been successful at bidding and winning deals similar quality, similar type assets to. And that range for us in the history has been in the 4 to 6 times range. Maybe if we cut the mics, I would tell you 4 to 6.5 times. But again, those primary drivers of size, growth, profitability. If it's a platform, higher multiple, risk might be slightly more diversified, spread across 8 locations. The profitability, the ability to grow, all those things would push and lean towards a higher multiple along that range. And then if it's a smaller, slower growing, maybe the facility it doesn't have a lot of room to expand, that might have a little bit, be attracted to the lower end of the range. But to be safe, I'd say since the history, call it 4 to 6.5 times. And of course, everybody says, well, mine's worth 6.5 times. So that's why I want to be careful with talking about multiples. But I think it's important that you do know what the range is historically. And also when you do start thinking about it, it can get emotional, right? Because if suddenly you're talking to somebody and they say, well, we value it at 5 times, you might be saying, well, this guy at NVA told me he was paying 6.5. Like, I want to be very careful that there's underlying reasons, important reasons, that would make one, worth 6.5 times and one worth 5 times. I'd say we have seen a slight softening of the multiples since COVID. So to answer the second part of your question, I think that's a fair statement. And some of it is just because although you would think our phones would be ringing with sellers, they really haven't been. I think people truly have been battening down the hatches and just circling the wagons and saying, most of us are going to just grit our teeth and get through it. And maybe now's not the right time to sell because my profit is down, my revenue's down. And then that's all true. And so I would say that we're not seeing a lot of sellers, and also there's not a lot of buyers right now in pet resorts. I think the strategic buyers I was talking about, there was a few of those. Some of those have not been very active. We've not seen a lot of them being very active. The financial buyers are like, if I put $1 million in this pet resort, it might have lost 60% of its revenue this year. Through half the year, right? And we've seen that, by the way. I'm not speaking out of turn. Across our 97, it's been hit pretty hard. We think we've seen the bottom and we're climbing out, and it's bouncing back. So we feel like we're going to end the year not up, but better than where we have been trending. So I think we've been sort of reacting to that, and our valuations haven't been leading the charge and setting any high watermarks for sure. So I would say our average multiple today is right around 4.7 to 5 times, sort of on the low end of that scale I gave you, just because that, we're still a little uncertain if the revenue decline that we've seen has really officially stopped. It's going to be tough. So when we bid, we've been bidding on numbers that are in, say, 2019, and trying to bridge that gap.
Right.
Because business has been performing at, say, $1 million a year for the past 5 years, and suddenly they're going to do $400,000 this year. Is it fair to say that business is only worth that? Not in our mind. You know what I'm saying? So we're making offers, we're bidding, but we're not bidding, on the high end of that range. But it's because we're stepping in at a point where there's still some risk, we think, left, right? So then it comes back to maybe the first question is now the time to sell, right? The one side is you'd want to sell when the market is, robust and frothy and there's lots of bidders. I mean, to maximize the value. There may be other reasons why you might want to get out now, but there are people that want to exit now, and we're pursuing them. And we've made several offers to those people that have been interested in having the discussion. So I wouldn't say now is not the time to sell. It's everybody's, what did we say from the beginning? It's a very personal question,
Right.
and everyone has their own time frame. So that's the range. I hope that helps. Is that?
Yeah, that's great. I think
just to clarify that what you're talking about would be the value of the business. And so you guys don't necessarily buy real estate, but some buyers would want to buy real estate. So if you're looking at total exit price,
Correct.
it'd be business plus real estate, depending on your situation.
Correct.
that actually was one of the questions that we got was, do you buy property?
The answer is yes, we do. In fact, we do. We actually like it. We like buying property. Now it's not, it's not our power alley, but we do think there's value in being a one-stop shop for sellers when they own the real estate and the business. So what our approach will be is to essentially talk about the business, go through the valuation process, understand the cash flow of the business, the EBITDA you talked about, apply a multiple to that, and come up with what we call an enterprise value of the business. And then we have a real estate partner that will partner with NVA to buy the real estate. And I'll share with you why they like that. Because typically NVA will guarantee a long-term lease with this REIT. It's CBRE. A lot of people know who they are, and they're active. They know what they're doing in real estate. But what they really like is they like buying real estate that NVA is basically guaranteeing, and that type of return, that asset class, and that return is very attractive for their investors. And here's the caveat. I mean, we provide value in being able to purchase both the business and the real estate. We have deal certainty. We can do it quickly. I mean, we can come up with the cash once we approve the transaction. There's no funny business. We can make it happen. So there's a lot of value in our ability to execute. In the other side of it, if you think of it, a lot of this audience probably knows some pretty sophisticated commercial real estate investors. I know I do in Nashville. I mean, I can hit a 3-iron in any direction and come across a half a dozen pretty smart people. They would love to buy the real estate for the same reason, honestly, right? So in other words, if you decided, I don't want to encumber this transaction, I want to sell this business, there may be some value in me having this annuity stream, this lease with NVA that's guaranteed coming in, it's mailbox money, and I can collect that. Some people decide that they want to hang on to it for a variety of reasons, tax planning reasons, what have you. There may be real advantages there. It doesn't mean that you only have one shot to sell your real estate to NVA. We'll always, by the way, want to buy that. But there's smart commercial real estate people in everybody's market that would have the same interest. Say, hey, look, Mary, I just sold my property, and I know or sold my business, and I know you have an interest in commercial real estate. You have a group of investors. Let me show you my lease. Would you have any interest in buying this? Because that's what they're buying, is the cash flow over some, 10-year, 15-year time frame. And they would probably have the same interest. Now, whether they can price it the same way CBRE does and values it, I'm not sure about that. But you have options when you own the real estate. And if you own the real estate, it's a very significant part of your business. In fact, some of you may know, depending on where in some city you are, that the real estate might be as valuable, if not more valuable, than your pet resort. And that poses a whole new set of challenges. I mean, a whole new set of challenges. Yeah.
The real estate was probably double the business value.
Oh, really?
Yeah.
Wow. No kidding.
So I'm going to jump in because remember how we said this usually only lasts an hour? Well,
yeah. I mean, where'd the time go?
It might go longer.
I was so nervous, you guys. I can't tell you. And I'm like, wait a minute. I got 10 minutes.
We still have a bunch more questions. But before we jump back to the questions, I just want to go over or have you kind of discuss for any size business, whether it's, one that's larger that might be a prospective business for NVA to acquire, or like we were talking about before, you might have a smaller business that's still very valuable and you could sell. But no matter what size your business is, what really do you recommend for making your business more valuable? Like, what's really the way, if you're not going to sell now, but you want to look at what should I be focused on to make my business more valuable in the future? What kinds of things would you recommend for that?
Wow, that's such a great question. Of course, boarding feels like it's number one. I mean, just let's go to, maybe I ought to pull up a little bit. Just go first of all to the services, the business mix, the product offerings. We've seen a variety of businesses. Heck, I've seen 100% training businesses that have blown me away. Like, I mean, incredibly impressive businesses. Retail, heavy retail, incredibly successful. Or grooming in some areas, just phenomenally successful. I would say and this may be hinting a little bit to what we've learned, I'd say that being diversified creates value, right? So in other words, not having all of your eggs, if possible. I mean, some people's business models are just different in design where they can't have the flexibility to add service lines. But to the extent you can be thinking about different elements and different products to add to your clients, I think is maybe the most valuable thing you can do. When we see actually training and grooming for us through this time was one area that held up. I mean, maybe not a surprise to people out there, but people are buying dogs and need them trained. Good Lord, I hadn't thought about that. So they're up finding trainers, and we found the pet resorts that offer training have done pretty well. Same thing with grooming. Again, surprise. I mean, people are spending money getting their little loved ones groomed and cleaned. And I mean, maybe it goes back to the whole humanization of animals. Again, probably makes a lot of sense. Of course, boarding got hit. So if you had, and we see this, 70% of businesses are boarding. When it was blowing and going back in as early as January, I mean, that seems where everybody wanted to expand into is boarding. But when nobody's traveling, suddenly boarding is the one that goes down the most. So I would say just be mindful of having a variety of service lines to offer, and maybe not too deep in any one, right? Like to a buyer, even NVA, and maybe some of this is just that we're still learning. There are like a mix of a business that had too much retail or too much grooming or too much training. That might feel risky to a buyer like NVA. Now, too much, what is that, 40%? Something like, you know what I mean? Like that would be a lot. But it's certainly higher than 2% or 3%, which is kind of what we typically see for, say, training, you know what I mean, or retail.
Right.
So I would say, again, to me, it feels like that's the one area that is like you can create a ton of value by just being diversified. Number two is hire good people and leverage them. Be the cultural leader of the resort, of the business. And if you can hire strong talent underneath you and begin to sort of, what do they say? Manage the business from outside, be more the strategic thinker, the leader of the business. I think that empowering your team, removing some of the day-to-day responsibilities off of your shoulders might, first of all, give you more balance in your life. But two, to a buyer like NVA, having seen sort of the stones be laid for a transition is important, because although that's probably the biggest challenge for NVA or any buyer would have of your business is to replace a phenomenally run business and a beautiful culture. I mean, NVA will spend the rest of its time trying to figure that out. Again, we can pay payroll, we can pay vendors, we can pay utility bills and collect checks and cash and credit cards. Replacing people and replacing the culture of a business, that's tough. That's the tough stuff. But if you can begin bringing people along that take you out of some of those responsibilities, not just the back office work, that's important, but beginning to, pass down or push up all the things that make your business great and successful and wonderful usually comes from the owner. And if you can begin to, train people up and give them the responsibility and begin taking yourself out a little bit from that day-to-day work, that we find adds a ton of value, where we're not looking to replace, like you didn't have a manager and it's been on your shoulders for 20 years and you're the cultural leader. Like we got a lot of pieces to hold together. You know what I'm saying? So that's what I mean by value. Does that make sense?
Yeah, that does make sense. What about, does NBA have a preference in terms of working with an owner who's a full-time owner or an absentee owner?
We have experience with both, and maybe not a preference. I think sometimes, just candidly, for us, it's like any entrepreneur. They're not in it for a boss, and we've found that when owners commit to leave, they usually want to just leave, unless they have another reason to say, look, I love my brand. I would love a capital partner to help me build my brand. I built these 2 or 3 or 1, and I want to build 2. That's a little bit different partner for us. But we have experience with people that have been so involved, and for them to maintain their involvement with NVA looking over their shoulders, and now suddenly they're, quote, an employee. That's tough. It's better to have just a clean exit then. But we've worked with both. I mean, we've been able to figure both out. We certainly, we appreciate any transition help that an owner would give us for some prescribed period of time, and we'd pay for that transition, right? But that's why having some of these other pieces in place would really be helpful. But again, it comes back to we do feel that when an owner is ready to sell, when they're out, because there will be some things in the resort that might change. We might add service lines. We might be thinking about doing a few things operationally to the business that they would not want to do. And we certainly don't want to be pushing people around like that. That doesn't feel right. It's not consistent with who we are as a company. And usually owners, they have their ways of doing things, and it's been successful.
Right. Okay, I'm going to go through a couple other questions here. One was, this is specific for NBA. Obviously, there's a non-disclosure agreement when you access their financial information, which gives them the value, even if they don't continue on with you. So what does that say about, like, kind of a breakup provision? Or is that I guess really the point of the question is, you have all that information now. So what does that mean if they don't continue with you? I think a little bit of concern of giving you all those financial if they don't end up doing a deal with you.
Yeah. So again, we on the hospital side will make about 100 acquisitions every year, or have been for the last few years. But that means we've been looking at 400 opportunities, and all of those have had confidentiality agreements in place. So there is other than, look, in the confidentiality agreement, if a seller wants their data back, we'd certainly be happy to send it back. Most often people don't expect anybody to put data back into a FedEx envelope and send it back. But if that's what people would like, to be completely comfortable, that's fine. There's really no tail. They're not locked in. Even through a letter of intent, it's non-binding. We certainly, when we issue a letter of intent, it does mean a fairly high degree of deal certainty. It means that we're going to close around the terms outlined in a letter of intent, albeit it's non-binding. So in a case where it's just, hey, we're sharing data, and say that either the seller, the prospect, or NVA come to a point where it doesn't make sense, there's no loophole where, you can't talk to anybody for a year, right? I mean, it's kind of fair game after that. And by the way, just for what it's worth, like NVA is, not made a habit out of suing clients, right? I mean, it's terrible business to be, holding people to certain things relative to, data like that. I mean, we're very willing to work with people, and it's certainly not intended to lock people up into perpetuity and prevent them from pursuing other buyers or partnerships. But, again, a little bit of his trust, right? You have to trust that NVA is not sharing that data internally, not sharing that data externally. Right. And if you want the data back, we certainly send it back, or we just discard it, is usually what we do.
Yeah, and I would say that if you were just giving that information out willy-nilly, y'all wouldn't be you all wouldn't be doing much business because that word would get
No,
out.
that'd be a terrible, terrible way to do it. And
Yeah.
I mean, by the way, I think it's important too that as active as we are, we other than knowing, especially on the pet resort side, where some of our opportunities are, like we can look at a map and see where the flags are and say, oh, okay, this one's close to this location or that location. We really, they are so different that we evaluate them individually. You know what I'm saying? So there's very little we can gain from looking at the data and of one pet resort and compared to that of another. I mean, they're just, I mean, parts of Texas, you can cross, I mean, go 3 blocks and you're in another world. I mean, it's just incredible, 2 miles away and you might as well be in another place, right? So there's a lot of reasons why we don't do that. We have all the data. We know what all the metrics are. Cost of goods sold as a percent of revenue, rent, lay staff. It's, although those are good measures and important for us to understand, that's not how we approach it, right? So not only are we not necessarily looking at how does this particular resort compare to our average, I mean, other than just directionally, we're not looking to, use their data to, help us with anybody else's operations. I mean, they're all so different. There's
Right.
no point in doing it.
All right, we are at an hour. So do you have time for 2 more questions? And you can
I do. Yeah, absolutely. This has been great. Yeah.
as you want. But so the last 2 questions that I have is one is just generically what about loans when you're going to sell, and specifically they're asking about the EIDL loans or the PPP loan, how does that factor into a sale? But I think that would be true of any loans. And then the other question is, if someone was planning on exiting pre-COVID and then kind of put it on hold, do you have kind of, if you had a crystal ball as to when you think someone should sell, when it would be better because the world looks better? Do you have any idea on in those kind of terms?
So let me hit the first one. We've only had a little bit of experience with pet resorts that have taken down the PPP loans. And those are, I mean, I think the law requires that they're paid back, right? Or they, or there's a penalty, correct? So
yeah, there could be an aspect of forgiveness, and we're still waiting on final say. But right now, they do need to be paid back. But
yeah, correct. So it's uncertain. I mean, we've had one that where a client took down the loan but never used it actually, and then just paid it back there. So that's still a little uncertain. I don't have a good answer for you there. We don't have a lot of track record on buying and what happens to the PPP. You're right. It can be forgiven, right? But then there's a time frame. There was like a time frame between when they took the loan and then when it's forgiven. So we're mindful of that and certainly can help navigate that. I'd say I don't have a good answer for the second question either, unfortunately. Like, when is a good time? Because there will be a time, like the deals that we've been bidding on since March, really, when we started to see the financials come in for the first quarter, and now the second quarter, and we started to see the real impact of COVID. We've been bidding off of sort of that earlier data set, the 2019 or the March, TTM through March 2020, without sort of that full impact yet of the COVID. So it'll be, honestly, it's going to be interesting to see how we do it. We just don't know. So I'm not saying we're not opposed to doing it. There may be something creative that we can do to say, look, we've been performing up here, but now it's down here. I mean, that's not a true valuation of the business. Are you going to make me wait until December or next March when the business begins to rise and you can see it come back? I don't know the answer to that. I mean, I don't think so, is what I want to say. There may be something we do with, not everyone's going to get excited about it, but it is a bridge between valuation, and that is sort of an earn-out, right? If you say, well, look, my business is going to come back, guys. I mean, I don't know what to tell you. I got $300,000 of EBITDA that I've been generating for years now, and I might be at 175 today, but I'm not going to sell my business at a 5 multiple for 175, right? I mean, that's half of what I think I can get for it.
Right.
And so there may be ways, I'm not saying would be completely attractive for a seller to say, well, then how about this? We agree with you. You're right. Your business is in a great area. It's a great facility, beautiful brand. You got a great staff. You've, begun to de-emphasize your relative day-to-day importance. And we think this business is going to get back to 300. And we would love to make you an offer today. And it's going to include some component of an earnout saying in 12 months, when that number gets back up, we'll pay you 5 times every dollar over, 175. You know what I mean? So in other words, we'll close the gap
right
over time. If you're willing to walk alongside us shoulder to shoulder, which requires some faith and a little time. But I could see us doing something like that. Otherwise, there might be might have to wait until it bounces back, right? I mean, that might be the alternative. Now, again, maybe that's not a bad thing. I mean, if the economy begins to turn around and we got a couple of important seasons coming up with travel, hopefully, where people are going to be using pet resorts, hopefully more. I can foresee a time where, boy, I mean, it'll be Christmas before we all know it, right?
right
And so, it's one of those things where it wouldn't hurt to understand. I mean, I think we're going to learn along with you as to what makes sense. I mean, we may try the earn-out structure 10 times and find out that it works no times at all. Like we can't win a deal doing the earn-out structure. And people say, you know what, I'm better off just waiting. That's fine, So again, I'm sorry, I kind of failed you on the last 2 questions with any really good answers.
No, it's your guess is as good as ours at times. There's no crystal ball. I think all of us thought this would be over a lot sooner than it was going. And
well, I hope the takeaway then is that, we do this a lot. We're active. We have some experience in doing it. We're not experts though, right? And we're not ashamed or afraid to say, I don't know. Let's figure it out together. I mean, you can learn a lot from us in this process. We can learn a lot from you in this process. Let's just be careful and come to the table, willing to share, have faith in each other, have faith in a process, and see where it goes. And there's a lot of value, I think, to be gained from that.
That's awesome.
Yeah.
Well, it's good. You provided, I think, a lot of food for thought and action items that every business owner, we believe, should be focused on, again, so that they exit on their own terms. So we may have to have a part 2 topic in the future. So we really appreciate your time and joining us today, Chris.
You're welcome. Thank you so much, Robin and Susan.
We definitely appreciate you. And I did put the link to NVA. So if you guys are interested in learning more, you can go there. Like I said, they definitely are a business in business themselves, but they are in the process of educating folks as well. So I think if you have any questions, they're happy to answer them. And again, as we talked about, every business is going to look a little bit different. And if it turns out that you're not in the area where for NVA to acquire you, you can probably still learn a lot about what's going to make your business valuable for any type of buyer. Because again, at some point you're going to exit your business. We would like you to exit on your own terms. Final reminder is if you want to continue this discussion, you're welcome to join our Facebook group. We have a Grow Your Business Facebook group on the Dog Gurus page. You can join that. And it's a great community just to ask any kinds of questions about whatever topics interest you. We have a great, very supportive community. Our only 2 rules are you have to be nice and you can't sell stuff. So other than that, you're welcome to join and just ask whatever questions you have here. We really appreciate all of your questions, and everyone who now has my cell phone number, please don't. I did want to give that opportunity for people to be able to ask questions without, having everybody see their question, just for confidentiality. So, but Chris, thank you so much for joining us, and everybody have a great rest of the day.
My pleasure. Thanks, everybody.